Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Charles Cascarilla. He's a co-founder and CEO of Paxos. We're going to take a look at a digital asset that is backed by gold and why it's the safest way to own gold. Chad, it's great to have you with us. Thanks so much for joining us on Trade Talks. Tell us about Paxos.
Jill, thanks for having me on. So Paxos is a really unique company. We are a trust company in the state of New York, which means that we're regulated like a bank, but we're actually safer because a trust company doesn't make any loans. So anytime a client sends money to us, we hold it in the client name. And so being set up as a trust company is a unique way of holding people's assets. And we then take people's assets that they hold with us and we put them into a digitized blockchain environment so that they can then move them around to anywhere in the world. And so this is the mission of Paxos, to change the way assets move. And we're trying to do it in a way that's very regulated and is very safe and secure for our customers. And that allows our customers to then be able to have more financial autonomy and control.
All right, before we get into the digital asset, let's talk about the gold market overall. Clearly, it's been very active along with the rest of the other asset classes as we're navigating through the COVID-19 environment.
Yes, I mean, gold has been really volatile and there has been some unprecedented movements. Historically, the spot gold market in London is been very stable, and that's where it generally trades. In the spot market, meaning that's where physical gold trades. But the actual futures market, which is also a very liquid market, but it's a derivatives market, is based here in New York, and it trades through the CME. And there's a little nuance here. Gold in London trades based on 400-ounce bars, but futures in the U.S. trade based on 100-ounce bars. And so what happened was there wasn't enough bars of gold in New York, and you couldn't get the bars here because all the refiners were closed because of the COVID pandemic. And so you couldn't get the right size bars in New York, and the futures market started trading differently from what was going on in the physical market. And there still was a little bit of a discrepancy, but it got very significant. It was $75, $100, and that actually created quite a bit of dislocation in the market. And this is because at the end of the day, gold is a physical asset, and derivatives are, by their nature, a synthetic asset. And trying to get them to stay together is not easy to do. We saw some of this actually in other markets too, like oil, but it became really obvious in gold because the refiners were closed. And once they reopened, this and everything began to settle down, these dislocations settled down. Now that's what happened in kind of in the trading. But in general, gold has been going up because a lot of what the Fed is doing and a lot of what other central banks are doing is printing money. And there's good reasons why they're doing that. But nonetheless, when you print money, that tends to mean that the price of gold will go up because there's a finite amount of gold. But as Jay Powell keeps telling us, there's almost an endless ability for the Fed to print dollars. And so that has been a very favorable backdrop for the price of gold as a safe haven asset in this very uncertain time period.
Yeah, and everything that you just said makes the case for digital assets. So let's learn about Pax Gold.
Yeah, I mean, I think we constructed a specific type of gold asset that really synthesizes the ability to hold physical gold, yet to have it be as liquid and transferable as futures or ETFs, which are kind of synthetic gold. And there's always this contradiction in physical asset markets where you have something that is easily tradable, but then it's not easily movable because everyone wants to be able to trade something that they know is the actual underlying asset. And so that's why people trade futures or ETFs. You can't really trade physical gold. You kind of have to go to your local coin dealer, and you sometimes have to pay 20 or 30% premiums. It's very inefficient. And then once you buy the gold, you might, I don't know, bury it in your backyard or put it on your mattress, and no one knows who wants to buy the gold from you if it's really real. So this is the problem. You either have the physical or you can trade something like the ETF. But Pax Gold actually is solving this problem because when people come to Paxos, you're able to buy tokens of gold that relate to the underlying bar all the way down to the serial number of the bar in a London vault held by Brinks. And so this is really very safe. This is very secure. It means you own the most liquid gold in the world, which is gold in the London market, which is what we were just talking about, how the London market really trades very liquidly. And you now have this token of gold. And the reason why that's an advantage is you can now withdraw that from Paxos if you would like, and you can send it to anybody else in the world who has a wallet, an Ethereum wallet. And that means that your gold can now be transferred anywhere at any time, 24 hours, 7 days a week, instantaneously for almost no fees. And if you ever want to come to us and redeem your gold, you can do that. And so that's where we think we've created a product that solves these inherent contradictions for both retail and institutional holders of gold.
Yeah, and like I said before, it certainly makes a case for digital assets. It would be so much easier if you can have that freedom of movement and security with more than just gold. So let's wrap up here and look at stablecoin issuance in general. Are you starting to see growth, and do you think it's sustainable? I think what we're experiencing right now in the marketplace certainly lends to that.
Yeah, and it's very interesting. The supply of digitized dollars, tokenized dollars, has basically doubled since the crisis started. So there was probably around $4 billion or so of tokenized dollars, and now we're probably around 8 billion. And so that's gone up for a number of different reasons. Partly it's because consumers and institutions want to be able to move their dollars around much more quickly. And just like with gold that's been digitized, you can move it 24 hours, 7 days a week, nearly instantaneously. The same thing happens with the digitized dollar. A dollar that's been digitized means that it's now on the blockchain and you can move it to anybody else who's on the blockchain. And that's 24 hours, 7 days a week, nearly instantaneously. It's maybe 3 or 4 or 5 cents to move your dollars around. That's so much cheaper than a wire fee. It's so much faster than going through a bank, and it's always available. And so in the case of Paxos, we have both our own stablecoin and we've created a regulated stablecoin product for our customers as well. So we have Binance and Huobi, which are the two largest exchanges in the world, and we've created a regulated stablecoin for them. And the total amount of stablecoins outstanding that Paxos is managing is approaching 600 million, which is more than double from when the crisis began. And importantly, these dollars that have been digitized are actually even safer than your dollars in a bank. Because when you send dollars to Paxos and we give you a digitized version of that dollar, it is dollars that we're then going and buying T-bills. So we're not holding it in a bank. If a bank fails, we have FDIC insurance for any of the funds in a bank. And then we have T-bills, which are the US government. And so when you put money in a bank, if you're over the FDIC limit, you now have risk that the bank could fail. But with Paxos, all of your risk is held against the US government. And so in that way, it's very, very, very safe dollars. And they're actually much more mobile and much more responsive. So that's the value proposition of why people are so interested and have increasingly moved to having a digital version of the dollar. It's starting still small. At the end of the day, there's, I think, $20 trillion, and there's only 7 or 8 trillion, about 8 trillion that have been tokenized, 8 billion, sorry, that have been tokenized. But it's really beginning to gain steam, and because you can do more and more with your digitized dollars.
All right, Chad, thanks so much for joining us on Trade Talks.
It's great spending time with you. Thanks for having me on.
Okay, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.